Can everyone see me? Can everyone hear me? Sound good? Let me put the music a little bit softer. I see people complaining about the music, so I'll put it a little bit softer because I like a little bit of background music. Right, legends, how's everyone doing? What is happening? Welcome in the house, Mr. Dave. I see you. Welcome, welcome. Roman, hi. Welcome to the stream. Dinesh, it's great to see you here. Legend in the house. Mr. Scoot, let the party begin. I'm glad you guys think this is a party, right? Let's keep it fun and exciting. All is well, devil. Yes, all is well, Mr. Dave. Thank you so much for joining. Smash up the like on your way in. It's your way just to click a button and share some love. It gets the YouTube algorithm to spread the channel so that we can grow and I can spread education to everyone. Right, legends, what is happening here with the price of Bitcoin? Today, I've got something interesting I want to go through with everyone. I have shared it with the Legends community in Discord this morning. Link down in the description if you want to join. I do want to say, okay, that myself and Andy and the team, we are busy with something great from a Discord perspective, okay? I don't want to spill too many beans just as yet, but what I want to show you guys also, we are growing the team. So if I share my screen over here, okay, down in the description of this video, if I zoom in over here, Bitcoin Census is growing. We're on the hunt for the best community moderators, both from a YouTube and a Discord perspective. If you think you have what it takes, this is a full-time role. Go and apply now. Also, we're looking for some technical analysts. If you think you can analyze a chart and you can make sense of it, go and apply. Okay, we're growing the team, some exciting stuff coming. Yeah, I don't want to say too much, but go down in the description. Go and apply. We're growing the team. See, Andy is in the house. Mr. Andy, you know exactly what I'm talking about. I don't want to spill the beans. Andy doesn't want to spill the beans, but we can tell you guys that there's some great, exciting stuff coming. Okay, if you think you have what it takes, go down in the description. Bitcoin Census is growing. There's 2 roles that you can go and apply for. Okay, let's make sense of this craziness over here. Irina, thanks. Welcome in the house. Guys, if you haven't checked out Andy Bitcoin Census YouTube channel, go check him out. One of the best range traders that I have seen. Okay, Andy is very humble. He will never tell you that he's one of the best traders. He will just tell you that he knows enough to stay profitable. Okay, because we know that the market is here to humble you. Right, legends, let's analyze this craziness over here. What I shared this morning in the Discord community, I just briefly want to go through with you guys today as well, okay? It might be mind-boggling, but I think it's extremely interesting. Okay, so I just want to share it with you guys. I put some work into it. I reanalyzed the charts, went through some Elliott wave scenarios from a higher time frame perspective. So first thing I want to do is just say, make sure that I've said hi to everyone. Miss Melanie, welcome. 117. Hello from Los Angeles. A little bit of a late night live stream from my side here in South Africa, but for Melanie, for you, it's still early. Okay, for you, it's still early. You don't have to watch the restream. You are watching me live. Okay. Thanks, chaps. Let's go. Let's go. Please give me some good news. I'm moments away from selling half of everything. Okay, with good risk management, we all stay in the game. Legends, let me make sure everyone can see what's going on here. I think my mic is nice and crystal clear. Okay, let's go. Let's go. Let's dive into the alpha over here. First thing I want to tackle, legends, is the following. Let's go. Let's go through this scenario over here. Okay. And Andy, if you're watching, you know exactly what I'm going to go through now. Okay, I just briefly want to go through some scenarios over here. I know the 5th wave looks a little bit overextended. Let's just put it there for now, so not to make everyone too super excited. Okay, legends, let me just take a sip of water over here. For some reason my mouth is very dry. Okay, let's go. Let's go, legends. Let's go. Right, legends, I like to zoom out when in doubt. So I'm just zooming out here, and although there are a couple of Elliott wave scenarios, I think this one still has a high probability of playing out because it's still intact and it hasn't been invalidated. So the first scenario that I'm watching at over here is, I'm here on the daily time frame, and we are still looking at, when the bull market started over here during December 2022. We're looking at this as a wave 1, 2, a massive explosive third wave here to the upside. And what is this? Is this a fourth wave for then a final fifth wave here to the upside? Or, okay, this is scenario number 1. Or we are still busy with a third wave. The fifth wave will still extend, and we still need to complete the fourth wave. So this is a little bit of a conundrum over here, but still bullish nonetheless. Whether one of these two scenarios play out, it is still bullish. Okay, so let's entertain this scenario here for a moment. Each wave has 5 waves inside of it. So the basics about Elliott wave theory is that when you have impulses to the upside, you have 1, 2, 3, 4, 5. End of impulse. It has 5 waves to the up, or 3 impulsive waves to the upside and 2 corrective waves to the downside. That's the basics of an impulsive Elliott wave to the upside, and this is what you want to see in a bull market. Okay, generally your third wave is not allowed to be the shortest wave, and it's generally also the most impulsive wave here to the upside. So there also needs to be 5 waves inside of the third wave. So for now you can count 1, 2, 3, 4. Okay, does this mean that we still need to go and complete the fifth wave inside of the third wave? Okay, so entertaining the scenario at the moment, number 4 can already be in. Okay, where we are still building up momentum for potential fifth wave here to the upside. And I mean, the retracement can go all the way, taking from this low can go all the way to the 786, and we complete the fifth wave here to the upside. Okay, I will go and analyze this scenario in a moment, but I think what's important is to take stock of where we are from a larger time frame perspective to see that, well, does the local price action support what we are looking for from a larger time frame perspective? Okay, I do want to give a disclaimer. At no point do I claim to be the best Elliottician out there, but I have learned a lot, and I've been studying Elliott waves for a couple of years now, and honestly, there's still a lot that I don't know. And but I will share with you guys what I have come up with. And so this is the first scenario that I'm looking at, is to say that, well, perhaps we are still busy with a third wave, and we still have to make a massive fourth correction, of which usually the fourth wave is the same length, if not twice or 3 times the length of number 2. So you could have an explosive move here to the upside up until $90,000 even. And then you can have a long sideways fourth wave that can take you into March of next year for this consolidation area to finish. You think this one took long, wait until you get to a longer wave 4, and then you have an euphoric fifth wave here to the upside that could potentially take us to that $100,000 mark that most people are eyeing from a bull market perspective. Okay, so all good and well, right? If this scenario still needs to play out, then you can take a time fib to measure wave 2 from the top of 1 to where 2 ended, and you can go place it on potentially where the third wave is going to end. And then you can see 1-to-1 ratio, 2 ratio, 3 ratio. I mean, yeah, by the second one is already a good ratio. It takes you into May 2025. So I don't want to depress anyone over here. I'm just saying that this is a scenario that could potentially play out. Then there's another scenario. Okay, so let's just go through all the scenarios over here. Nothing is ever for certain, not even from an Elliott wave perspective. I think there's a big misconception from an Elliott wave perspective that people think that people that know Elliott waves know exactly where the market is going to go next. They don't. Okay, they have many scenarios, and based on what price action more locally does, a certain scenario gets invalidated. Okay, the other scenario that I'm keeping in mind is, what if 3 is finished? And we are now, at the moment, as we speak, busy with the bigger fourth wave already. Okay, and waiting for an explosive fifth wave here to the upside. So if we then entertain this scenario, and I mean, we can count, if we really force the counts, we can count 5 waves, inside of this structure. Okay, so let's entertain the scenario to say that the big 3 is already in. But What's a little bit concerning from this structure's perspective is that you want for a bull market, I mean, to see this price action, okay, to see this price action that we had during the previous bull market, this is not impulsive enough for a third wave. A third wave is explosive to the upside. So there is a rule in Elliott wave theory that says if your third wave is okay, it's not explosive enough, it's a little bit longer than number 3, it didn't really hit the 1.618 or the 2.618 or the 3.618, you do have a possibility for a much extended, a super extended fifth wave, and we can go and calculate where that target is. Okay, preferably when the fourth wave is in. So if this scenario had to play out, which I think a lot of people are waiting for, and they want this scenario to play out because this is going to give you that face melting price action to the upside. Everyone wants to see the candles that we got during the previous bull cycle, is to say you can take a fib extension, and I can speculate here at the moment, just take a fib from the low of 1 to the top of 3, and I don't know where number 4 is going to end, but it feels like it needs to end in this area, and I'll explain to you guys now why. Okay, if I take a fib, right, I know this is complicated and not everyone will understand, but I do think it's interesting to see where price could potentially go, even from an Elliott wave perspective. Okay, if I take a normal fib from the bottom of 2 to the top of 3, if we are busy with a fourth wave, Elliott wave theory states that ideally the maximum target is the 50% fib level. A common target is the 382 over here, which we have not tapped yet. Okay, we literally turned around before the 382, as everyone can, if I zoom in here, just make sure everyone can see. Okay, we have not tapped the 0.382, which is considered usually a minimum target. Okay, why is everyone dropping off? Is there something wrong? Hello? Okay, everyone's still there. Let me know in the comments if everyone's following. It looks like everyone, or the viewers, are dropping off. I'm not sure if there's technical issues at the moment. Let me check here. Refresh. Let me check here. Looks, all looks good. Guys, let me know if everything is good. Seems fine. Okay, cool. Can I continue? Right, let's continue. All good. All is well. Okay, I thought I lost. Okay, now I see everything's recovering again. Something freaky happened over here. Okay. We are here. Thanks, guys. Thanks, guys. Let me continue. Okay, so generally speaking, the fourth wave has a maximum target of the 50% fib level over here. Okay. You're absolutely fine. Thanks, Roman. Mr. Feature, all okay? Irina, hi, Andy. Yes, Andy's in the house, always. We are here. Cool. All good. Right. Legends, let me continue. And I hope you guys are following me. And write in the comments down below if you would like me to explain something else a little bit better. I know this is extremely technical, but it's extremely interesting as well. And I'm going to show you guys how you can, by knowing simple Elliott wave theory, you can apply it on your daily trades from a scalping perspective, little small movements to the upside and to the downside. So this is purely from a macro perspective, what I'm looking at over here. Okay. So everyone wants momentum here back to the upside, okay? But what if number 3 is already in? Then what I do is I take also, from a timing perspective, I go and measure how long was this wave number 2 over here, okay? And then I measure from the top of 3, from a timing perspective, are we close enough for a bounce? And you can see we are now by the 0.618, and ideally what you want to see from a fourth wave is at least a 1-to-1 ratio. It can happen before the time, okay? The minimum target is usually considered the 0.382, a preferred target the 0.618, where we are right now, but ideally you want a 1-to-1 ratio, or even a 2 or a 3. Okay, so this means that this consolidation area over here, if the 1-to-1 ratio had to play out, and we come and we bounce here by the 50% fib level, which is at $49,400, it is still bullish from a macro perspective, and I can I can tell you guys now, if we had to fall down here, you know, we're going back to $10,000. Everyone's going to be bearish. What the hell is going on here? Okay. So, and this can take us to 8th of August. This consolidation area can still last until the 8th of August. Just to put it into perspective, where we can still range until the 8th of August, or even longer, until the 20th or the 2nd of Jan 2025. But, you know, let's just hypothetical play out this scenario over here. Right, then I can take the time flip out the way. If the fourth wave comes to the 618, or dips even, you know, it starts coming into this territory over here, you start increasing the probabilities for more bearish scenarios and potentially the invalidation of this impulse here to the upside. So ideally, you want to see a maximum target of the 50% FIB level or the 382. Okay. What I do like about this target over here is, if you guys have seen the liquidity heat map, there is billions of dollars of liquidity below this consolidation area over here. So perhaps it would be a good move to come down here, grab the liquidity, and then get that euphoric fifth wave here to the upside. Okay, so and this is the most bullish case scenario that I do have at the moment, is to say that if we are going to experience an extended fifth wave here to the upside, because number 3 was so short, an extended fifth wave is by the 618. The way that I've measured it now, when you take a FIB from the bottom of 1 to the top of 3 to the bottom of the potential 4, if it does bounce here by the 50% FIB level, and it can take us to $142,000. Okay. So, some bad news and some very good news. Okay. Is everyone with me? Only 2 likes. Smash up the like for the education over here. Is everyone with me? Is everyone with me? There are other bullish scenarios as well, legends, where, you know, some Elliotticians are looking at this as a 1-1-2, a 1-2, 1-2, 1-2, and then you're going to have a massive third wave here to the upside. It's just some of the other bullish probabilities just have a lower probability of playing out because of the counts inside of here that's breaking some of the rules. And what I would like to share with you guys is there's always a scenario that's breaking some of the Elliott wave rules. So you're trying to find the scenario that's breaking the least amount of rules. So it's never easy. It really is never easy, not even from an Elliott wave perspective. But it is very interesting nonetheless to say that we could potentially hit $142,000 if we have an extended fifth wave here to the upside. A minimum fifth wave for this scenario would be taking a FIB. Okay, let's take this out. From the top of 3 to the bottom of where 4 is going to end. And I mean, obviously we need to wait for the fourth wave to be complete. I reverse the FIB, and this is usually considered a minimum fifth wave target, which is not so nice. Okay, $83,000 to $79,000. So between the 1.382 and the 1.236 is considered common fifth wave targets, where you have a lazy 1, 2, 3, 4, 5, and then you have a deeper A, B, C wave here to the downside. Okay, but I mean, that doesn't seem like much of a bull market to me, but still a scenario nonetheless. A little bit of an extended fifth wave is by the 1.618 at $89,000, let's say $90,000. Okay, so I guess what I'm saying is a lot of people are looking for that $145,000 fifth wave here to the upside if the scenario is going to play out. Right, so I think two key things I wanted to take from this scenario over here is to say that this consolidation area can still last for much longer than what people think. Okay, but we are at a minimum retracement target where we could make the first wave 1, 2, 3, 4, 5, and we can start moving up from here. Okay. Legends, what I want to do now is let's just take these scenarios out the way. And I think it becomes a little bit more interesting as I start now zooming into this structure, what can happen more locally. So when I then take this out and I say bullish scenario number 1, now let's zoom into this structure over here. Okay, let's go on to the 4 hour. Right, legends, this is the first bullish scenario that I'm still watching, is to say that, well, if if this is the end of the correction over here, we've already made the low and we are now busy building an impulse here to the upside. Ideally, what you want to see is that any retracement here has a maximum target of the 0.786. You do not want to see us really go lower than this level over here, $59,827. We need to hold that level as a maximum target. We have already tapped the 0.382, okay, which is a valid second wave target. So inside of this box, we could still form a 1, 2, and a 3 here to the upside that can take us to $86,000. Okay, 4, if this structure is going to form the impulse here to the upside. If you start going down below the 786 over here, it's more than likely you're going to take the low. Okay, it increases the probabilities that you're going to take the low, and perhaps this becomes a larger A, B, C here to the downside, which I'll get to in a moment. Okay, so for this structure to remain impulsive to the upside, we have a maximum target of $59,800, where we can then see a 1, 2, 3, 4, 5 here to the upside. And I do see this as a minimum target of $90,000. Okay, but this structure needs to play ball. And remember what I've told you on the daily time frame is that perhaps it needs to make another low first. Okay, so the other scenario that I wanted to share is, now I'm getting to the bad news, the bearish scenarios, right? Is a bullish/bearish scenario. And I think from an Elliott wave perspective, a lot of Elliott wave traders are favoring this scenario at the moment. Okay, where this consolidation area is forming a larger A, B flat, where you take the high, making everyone extremely bullish, and then you smack down to complete a C wave. Okay, hope this makes sense. This is going to make people, I can just imagine when you take this high, okay, if the scenario plays out, how bullish the world will turn. New all-time high, Bitcoin is going to the moon. Put on your moon boots. You know how Twitter, the tweets go on X, everyone goes crazy, and you reject inside of this green box. Okay, and this green box is between $80,000 and $77,000, and this is a B flat target box, measured from the high to the low of A, and then you get this target box over here, which is a very common B flat. A B extended flat basically means you have an A, B, which takes the high, faking out, and then a C wave here to the downside. And then this C wave can bounce anywhere inside of this zone, quite a big zone over here. C waves generally like the 1-to-1 ratio, and I have seen them bounce on the 1.236, which is also a C wave target, but generally what I've seen is if the C wave starts rejecting by the 1-to-1 ratio, it likes to go to the 1.618 at $48,959. What I like, okay, I know it's bearish, but what I like about this scenario is that it will claim the liquidity below this consolidation area over here. Okay, I want to show you guys the liquidity over there. Let's go and look at liquidity. I think I might have to go into the 3-month. Just wait for it to load up. Right. Here we go. Here we go. I might have to go in more. 6-month. Wow, it's been a long time. We've been consolidating for long. Can you guys see the liquidity below this consolidation area over here? Just make sure everyone can see. Yes. We have billions, 1.23 billion, 1.1 billion. I mean, there's at least 5 to 6 billion of liquidations below these lows over here, of which, so, and then do you guys see the liquidity above the highs? So imagine this scenario playing out. Okay, you have massive liquidity above the highs at the moment, and you have a massive liquidity pool below these lows. So imagine this scenario: you grab the liquidity above and you grab the liquidity below, and then the massive impulsive wave starts to the upside. So can you guys see why eliticians like this scenario so much? Okay. Also, then in this structure that we are forming right now at the moment, the maximum target for this structure to remain, for this to still take place, is also the 786 taken from the low to the high over here. Okay, as soon as we leave or we lose the 786 level over here, this scenario becomes invalidated. Okay, so this is how we track the invalidations and whether the scenario will play out. So typically what eliticians will now look at is as soon as you take this level, then other scenario starts kicking in and this scenario is invalidated. Okay, which brings me to my last scenario over here. Bearish 1. Okay, so this is now where this scenario starts kicking in. So if we take the 786, okay, from the fib, from the high to the low, we take the 786, we can then be forming a larger WXY here to the downside. And the Y wave likes the 1-to-1 ratio and the 1.236, and it can even be as shallow as the 0.618 at $63,000. Generally speaking, I have seen a common target of the Y wave being the 1-to-1 ratio, where you don't even have to claim the low. Okay, but it would be nice to grab the liquidity at least below this low, where it literally is just a W, X, the high is in for now. The high is in. We're not going to take this high right now. We're first going to come sweep the liquidity below these lows and potentially even this low. We're going to smack down here. Most probably find support by the 1-to-1 ratio at $57,000, 700, give or take. And then we're going to start an impulsive wave here to the upside. Okay, well, let me know in the comments which scenario you think has the higher probability of playing out. Okay, right, legends, I hope you found that interesting. Let me go through some comments over here. 47 likes, destroy the like button. Yes, guys, thank you. Smash up the like for the education over here. Mr. Legend David, thanks for being here. Hi, I see you. Feature. The liquidation can vanish when people take profits, right? Yes, I have seen that happen. You make a very valid point. Often what will happen is when price starts moving down and you start taking the 786 level taken from the low to the high, I have often seen liquidation level starts vanishing because people are like, okay, the Elliott wave scenario is now invalidated. We're most likely going to come down here for a C wave, and then people start cashing out their positions. Okay, so definitely that can happen. I have seen it take place. I'm taking notes. Right, take some notes. Right, legends, that's basically the Elliott wave scenarios that I'm looking at. Legends, I know this might be difficult and mind-boggling, and you might find it, like me, very interesting, but let's keep it simple now. Let's throw Elliott wave theory out the window, okay? Let me switch off the scenario over here, and is to say, well, how do we trade level to level? And the one thing I also want to bring across over here is that even from an Elliott wave perspective, there's no certainty in the market. You have to have clear invalidations, you have to trade with good risk management, and you have to throw in a couple of indicators. Well, I only use one indicator, which is CVD, proof of support, proof of resistance, daily levels, weekly levels, and that's just pure technical analysis, is to say that if I do not know Elliott wave theory, what on earth am I going to do inside here to make money? Okay, and the easiest way I can explain that is to say that, well, you have daily levels, you have weekly levels, okay? Interestingly enough, there's a weekly point of control over here, and you have monthly levels, okay? But now I can start zooming into the structure. Let's now go into the 1 hour and see what is cooking over here, okay? Now, this is where things become very interesting, okay? And then you have Fibonacci and areas of confluence. And my favorite trading strategy is swing failure patterns, because you can apply massively good risk management on them. They do, however, require a little bit more screen time. You have to be in front of your screen, you have to manage the position, you have to manage your risk. So, you know, the only downfall is it requires a lot more screen time when you're playing swing failure patterns. I mean, by all means, if you want to use limit orders, up to your risk. But for me, I cannot use limit orders on swing failure patterns. You have to be there observing the price reaction as it happens. Okay. Swing failure pattern, for those of you that don't know what a swing failure pattern is you, for example, have a pivot over here, a clear pivot, and you have a clear pivot over here. You know, those clear pivots that you can see on at least a 1 hour or 15-minute time frame. There's another clear pivot over here. Okay, so typically what happens, and this is exactly what happened over here. beautiful swing failure pattern where you dip in, you fail to break that level or go down lower, you get acceptance back above, and that's where you long. When you get the acceptance back above, not as you bloody falling, because I see a lot of people making the mistake like, oh, they're watching this level, and then price does this, and then they start entering, buy, and then price does this, and then they start liquidating or adding to their positions, and they burn a massive hole in their account. The trick to a swing failure pattern is you put in your line. Okay, there's your line. You can set the alarm. I like to set alarms on this line, and I even like to set a couple of alarms above the line so that I get reminded to come and sit in front of my computer when my alarm starts going off and price starts moving into my area of interest. And then when you zoom into smaller time frames, okay, you can see how beautifully we swing failure patterned from this low over here, from this. Okay, let me zoom into this price action. You dip below and you get acceptance back above. So typically what you would do in this scenario, and smash up the like for the education over here, is that when you dip down below, you're not interested. You sit on your hands. When you get the acceptance back above, that's where you enter. I mean, you don't have to be sniper and try and catch it exactly at this line. Sometimes I'm late to the party. I'm a little bit late to the party. But often what happens is you get a retest. Okay? And then between this pivot, the high, and the retest, you will see bullish CVD forming, giving you confirmation that the movement is going to come claim the high and potentially go higher. Okay, that's how you play swing failure patterns. And what's so powerful about a swing failure pattern is the fact that you can have such a tight stop loss. You have your stop below the wick, you enter in this area, or you wait for the retest. Perhaps you enter over here, and I think that was the 786 if I'm not mistaken. If you take a fib from the low to the high, just front run the 786 by a little bit, okay? But you could have entered here even by the 618. And then when I go and look at CVD, okay, let's go back to that price action. This is why I love CVD, and this is why it's so powerful. Okay, here's the structure that happened. So I zoom into this structure. I'm on the 5-minute time frame. I see the swing failure pattern. I'm like, oh, I'm not sure. I'm going to wait for the retest. That's the safer entry. You come down, and then what happens is you form bullish CVD on yellow and on blue. Okay, definitely worth taking this trade here to the upside. And then bam, you have your momentum back to the upside with great risk management. Right, I'm talking myself out of breath over here. You guys like the education? Right, legends. I always say I'm not going to give away too much alpha on my YouTube channel, but I end up giving away all the secret sauce. I just want everyone to be successful. I want you guys to learn to catch fish by yourself. I want you to see what to look out for. I want you to enter trades with good risk management. Legends, I've had a couple of conversations with traders that are starting out, and I think the biggest fault that I've identified is, and it's a mistake that I used to make as well, is that people are entering with way more money than what they're supposed to be entering. If you are entering a trade with 100% of your capital at 10x or 20x leverage, you are risking too much, okay? You might win 1 or 2 trades and feel like the king of the castle, but I'm telling you now, you're going to get smacked once, twice, 3 times, and your account is out. You liquidate it. You're out the game, okay? You have to practice good risk management. Never risk more than 1% of your capital per trade. Okay, legends. Now, let's go. I mean, this is why you're all here. What are the trading setups that I'm looking at right now? This structure. This structure. Very, 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 very confusing. Okay, let's start from the beginning. Take a fib from the high to the low. From the low to the high. Okay, and we have, okay, now probability starts increasing because you've tapped the 0.88. You increase the probability that even if you get momentum here to the upside, you're going to come and take the low most likely before you take the high. Okay, so because I know that the 0.88 increases probabilities of taking the low first before the high, I now want to see if I can spot a bearish CVD on the momentum to the upside between this pivot and as price moves to the upside. And as soon as I spot a bearish CVD, okay, because typically what happens in this scenario is usually you retrace until the 618 and then bam, you take the low, right? I've seen it play out many times. Not guaranteed, but in most cases it plays out. Okay, but I want to see bearish CVD to confirm the momentum to the downside. Also, legends, this looked like such a beautiful 5-wave structure. So this is why it's so nice to know a little bit about Elliott wave theory, is that I can count 1, 2, 3, 4, 5. Beautiful 5 impulsive waves here to the downside, and they balance perfectly. I've measured them out, Fibonacci's, everything perfect. Beautiful Elliott wave here to the downside. And this is perhaps, was this an ABC? Or is this an A, B, C? Okay, can go a little bit higher. And then, bam. Right, so let's see how this is going to play out. I would definitely keep an eye on this high for a swing failure pattern. Okay, if we break above and we get acceptance back below this pivot over here, I'm interested. I'm there like a bear. With good risk management, I will definitely attempt this trade. Also, this pivot over here, I'm interested. I'm interested. I want to see how price is going to react over there. Okay, but I mean, legends, there's also the possibility that we just fall down from where we are right now, because we have hit the 0.88, increasing probabilities to come and take the low. Okay, yesterday during my live stream, I also said that where were we trading? We were trading over here, okay? And I think I had this scenario plotted out. Let's just take the fib out here. I had this on the screen. For those of you that joined me last night for the Fed press release, you will know that I had this on my screen while Mr. Jerome Powell was saying everything is data dependent. Okay, I had this. Do you guys remember? Just want to make sure. Yes, okay. And then what I said is, I think it was this structure. Yes, it was this structure, if I'm not mistaken. Okay. I think I had it here on the 5-minute time frame. Okay, yes. And now I remember it was this. It was definitely the structure. During the live stream, what I did is I highlighted this line over here. And I said, guys, the 1.618 needs to hold. If we're going to bounce, it needs to hold. If we close candles below the 1.618, we're going to go down to the 2.618. And even lower, we're going to come fill the gap. You're going to fill the gap because the range low has been invalidated. You've already tapped the range low. You tapped it for a second time, and now you have broken it and you've tapped the 618. So it increases probabilities that you're going to come fill the gap. And then when I switched off the live stream and I went to bed, we just fell down here. And then we tried, look at where we retested the scene of the crime, and we went down further and we went down further. So I mean, yeah, again, I often speak about the range high and the range low strategy. Okay, just as soon as you tap this line twice, you're going to fill the gap. Okay, high probability, and that's exactly what we did. I think we didn't even find consolidation by the 2.618. We just literally fell down. Okay, cool, legends. So from a trading perspective, what I'm watching out for now is from a shorting perspective. Okay, these are the levels. If you guys would like to know the levels that I'm watching, okay, I don't like to give signals, but I am very interested in this pivot from a swing failure perspective, and I'm interested in this pivot over here. Okay, from a shorting perspective, I want to see how price is going to react when we get here. From a longing perspective, and I'm sure Andy has spoken about this as well, because we are both watching that level. Okay, from a longing perspective, I am watching this pivot over here. This pivot really looks juicy to me. I want to see how price is going to react when we get here. I'm going to move this line to there, and I'm going to put an alarm on it. I don't want to miss it. Okay, I want to see what's going to happen when we get there. We have to acknowledge we also have a daily level slightly above, so we could front run this level that I think a lot of people are waiting for. Okay, I just want to make it clear. We could front run this level because we have a daily level over here. Let me just make sure that that daily level is still valid and intact. I just want to, you zoom into the daily time frame. If you want to know how to place your daily levels, guys, I'm giving so much alpha away over here, right? We still have a valid daily level, open and close. It hasn't been tapped. We still have a valid daily level over here, hasn't been tapped. And we have a daily level over here and also a weekly level. Okay, weekly level and a daily level. Strong support here at the bottom if we do find continuation to the downside. Okay. Legends, as always, also just a reminder for those that want to come and trade with me, Bluffin, 𝗬𝗍cie, and 𝗖𝗿𝘆𝗽, 3 of the exchanges that I use to do my daily trading on. 80k bonus here on Bluffin. I'll be honest with you guys, I'm really enjoying Bluffin, and I'm doing most of my trading on Bluffin at the moment. And I do promise you guys that I will start picking up on the copy trading aspect. Again, I've just been so busy with other things, preparing for the new Discord and the relaunch, and don't want to say too much, but I'm going to give this account a little bit more love. It just needs it needs focus, and I need to pay attention. I need to spend time in front of the chart, and I don't want to stuff it up. So I'm going to give it some love and attention. Go sign up with the link down below for the biggest bonuses, and also to come and join me in the copy trading. There are still spots available, 𝗖𝗿𝘆𝗽 and 𝗬𝗍cie. Okay, you don't have to KYC with Bluffin. Right, and then also for those of you that's joined late, we are on the hunt. We're growing our team. Myself and Andy need help, okay? We need community moderators from a Discord and a YouTube perspective, preferably full-time people, okay? Apply here, and myself and Andy would love to interview you. And also we're on the hunt for technical analysts, full-time technical analysts. Go and apply over here, okay? We're growing our team. Down in the description, go check it out. Right, legends, I think I've pretty much gone through all the scenarios over here. What I also like about, okay, the range low over here is that when I take a fib from this pivot to the high that we've made, okay, we have the 0.618. When I take a fib from this pivot to the high over here, okay, we have the 50% fib level. So there's just so much confluence at this level. I can't help but think that perhaps the market is going to front run it with this daily level over here. Because often, legends, what I've seen in the past is that when a lot of people are watching a specific level, and I'm not saying a lot of people are watching this level, but when there's so much confluence at a specific level, there's usually 2 things that happen. Okay? And for those of you that's been following me, you know exactly what I'm about to say. The market either front runs the level or it breaks it. I've seen it play out so many times. When there's lots of confluence, you have a range low, you have the 618, you have a 50% fib level. It just feels like the planets are aligning over here. You either front run it, and this is why this daily level is so important to me, or you break it and you perhaps come and bounce here by the 786, or we come and tap this weekly and daily level at $61,550. But I mean, I'm very curious to see how this is going to play out, and then once the scenario is played out, we can go and dissect what actually happened. Okay, let me go through some comments. Drink some water. Sir, please talk about the 1 hour FVG around zone that was formed on 12th June candle. Will that full? Are you talking about CME gaps? I have no idea what a FVG is, okay? I know that I'm a trader and I make money from trading, but I have no idea what a FVG gap is. Is it a CME gap? Let me know. Okay, Bricken, hi Devald, welcome to the stream. Valerie, also like Andy education. Yes, myself and Angie just have a passion for education. Right, when no stream or video, I always make mistakes, so your education is needed. Like, thank you so much, I appreciate it. Thank you, D, we appreciate you helping us to understand. Mr. Dev, as always, thank you so much. Thank you, sir, for all your knowledge. Thank you. So I'm glad you guys are enjoying the education over here. That was great. Thank you so much, Vincent. Melanie, freaking awesome. Thank you. Yakosta, I just really love the education. Start learning immediately with Devil. Thank you, sir. Smash up the like for the education. I appreciate it. And I just have a passion for educating people. I want you guys to catch your own fish, okay? I don't want you guys to rely on YouTube influencers for signals, okay? I also follow a couple of people because I'm still learning, especially from an Elliott wave perspective. That's most likely the only people that I still follow are people that I feel are way better at Elliott wave theory than me. I go and study how they look at it, corrective moves, WXY patterns, leading diagonals, ending diagonals. I mean, corrective structures can become so mind-boggling that I'm still learning all of those things. And then I come here and I teach it to you guys in a simple way that you can all understand it. Okay, right, legends, what else? I wanted to address one thing over here. I just want to see if I have it. I want to talk about CRV. Ladies and gentlemen, I want to talk about CRV. Let me do this. Okay, clean up the screen over here. Let me drag this across. Can everyone see this? Okay, before I dive into CRV, what I wanted to just quickly go through, someone asked me a question on one of my YouTube comments to say that, 𝗬𝗍𝘆𝗽𝗍, you said, if Bitcoin dominance drops, it's going to protect the alts. And why is CRV not protected and it's taking this dump to the downside? Okay, there's a very simple answer for that question, is that when an altcoin is healthy and it's doing what it's supposed to be doing and the tokenomics looks good and from a fundamental perspective, there's not really anything wrong with it. If Bitcoin dumps and dominance drops at the same time, it tends to protect those altcoins. So they will still drop, but they won't bleed out as hard. I think most traders, and you guys most probably know that as well. If dominance drops and Bitcoin drops, it tends to protect the altcoins. But if there's something seriously going wrong with a specific altcoin, like the founder got liquidated or the CEO resigns or someone hacked the platform, there ain't no dominance protecting that altcoin. It's going to dump. Okay, or bad news, what happened to Waves? Binance announced that they're going to delist the Waves token from their platform, and it took a massive dump to the downside. So dominance is not going to protect that specific altcoin. So what happened with CRV? And full disclosure, I do have CRV on my spot bag. Luckily, I have a diversified portfolio, so if something bad happens to one of the tokens, I have other tokens that can pick up the risk. Okay, and that is why it's important to diversify your portfolio. And as always, no financial advice. So this news came out today. 𝗖𝗿𝗆𝗍𝗍 was liquidated for 140 million in CRV. The price of CRV fell through liquidation threshold this morning with the entire 9-figure lending position liquidated across 5 protocols. Okay, so basically 34% of CRV tokens flooded back into the system because it was liquidated, creating a massive supply shock. There wasn't enough demand to buy up the supply. And then we saw this on CRV. It actually looks insignificant. We saw this little dump here to the downside. Okay, and I see people are freaking out about this dump over here. I really like sometimes bad news because it does provide great buying opportunities. Just want to see if I can see. CRV creator really took a bad risk. Yes. I think what makes CRV a little bit more, how can I say it? This is, if you believe in the fundamentals of CRV and you are a believer that in the future, from fundamentally, CRV are still going to do great things. I mean, dips like these are usually great buying opportunities. What I personally don't like from a fundamental perspective is that this is the founder. Okay, this is the founder that got liquidated, and usually when a founder steps off and goes away, that's not great. When the founding member of the business walks off, that's usually not great. But I think, you know, considering on the daily time frame, this little, what do you call it, this little thingy here to the downside, you know, obviously it was high volume and it can continue, doesn't look so bad at the moment. Okay, perhaps the market still needs to absorb the news, but what I will tell you guys is that bad news sometimes creates great buying opportunities. If CRV had to come back up, okay, perhaps it dumps a little bit, but it starts recovering and it gets back above these lows over here. It starts getting back above these lows. I am interested again. I am interested because this is then a swing failure pattern. You fail to break down, you get acceptance back above, and then off to the races you go. But I'm only interested in CRV again when it reclaims this area over here. Okay. Right, legends. So I just wanted to address that one thing from a CRV perspective, and also how it ties in with Bitcoin dominance. Hope everyone understands and it's all crystal clear. Right. What is happening with EGLD is going more down. Let us go look at EGLD down here quickly. EGLD. Mr. EGLD, where are you? I think most of the altcoins, guys, if I took back to access. Right, sorry guys, there's just some pop-ups that pop up over here. If I look at this list of altcoins that I have here on the right, I mean, everything is taking a dump. You've got AVAX 4% down, you've got Atom 4%, 4%, 5%, 4%. I think everything is taking a dump here to the downside, because obviously the king of crypto is taking a dump here to the downside, and most likely dominance is consolidating here to the upside. So dominance is not protecting the alts really nicely over here, but I can imagine if Bitcoin dominance had to fail here and start breaking down, that will protect the alts. But if Bitcoin falls and dominance finds strength here to the upside, then we're going to see alts bleed a little bit harder. Okay, but I mean, EGLD still looks healthy to me. Okay, let's see. You guys can see I've been analyzing like a crazy maniac over here. So basically, just to tell everyone what I was trying to do over here is that I've measured this wave, okay, the impulse. This is the impulse to the upside, and I want to see how long the correction is going to last. And the 1-to-1 is at 16 August. So this consolidation can still last until 16 August, where you have a 1-to-1 ratio where we could potentially see a bounce. Okay, so that's all I was trying to do this morning. That's why it looks a bit messy over here. Okay, let me take this out the way, clean this up. I mean, it still looks good. So a flip from the bottom to the top, we're at the 786 level. I mean, for me, this is where I start accumulating. I've told you guys that I'm building a swing portfolio to the upside. I like it when prices comes down further, because I get a bigger position size and I get lower entries. Okay. And I mean, by all means, any of the altcoins that come and claim the lows over here, okay, if you see that, you want to be in. If you see the lows being claimed over here and you fall down, you stay, you sit on your hands. When you're down, when you're below this line, you sit on your hands. You do not do anything. You wait for the recovery. And when you're back above, that's where you're interested, because this is a swing failure pattern from the lows. It failed to break down. It's getting acceptance back above. You know where to put your risk management, and off to the races you go. And I'm saying worst case scenario, this could play out. Okay, but ideally I would like to see us consolidate here in this zone. I would really like to see the consolidation take place in this zone. Okay, and then off to the races we go. And I want to build my position inside of this zone. Right, let me see what's going on here. Legends, smash up the like for the education over here. I hope you all enjoyed the live stream. And as always, remember, down in the description, here's the 3 exchanges that I like to trade with. It's also your way to support the channel, and for me to keep on bringing you this education. It costs you nothing, and you get the biggest bonuses and lowest fees to trade with. Okay, legends, that is all. That is it from my side today. Thanks so much for being with me and for listening to the education. I hope your notebooks are full of notes, and sleep tight for those of you that are going to bed right now, and I will see you guys in the next one. Cheers for now.